What's up everyone? If you are new here, my name is John and this is Talk Finance. And today we will be reviewing Stag Industrial's fourth quarter earnings release and full year results for 2022. Before we start, I would like to tell you that this video is sponsored by me. You can support this cause by hitting the like button. That's right, at no cost to you, you can be helping a channel like this by hitting that like button. And you could always subscribe as well. I'm just saying. Okay, let's get back to the video. In case you don't know much about Stag Industrial, here's some information on the company. Stag Industrial is a real estate investment trust focused on the acquisition and operation of industrial properties throughout the United States. By targeting this type of property, Stag has developed an investment strategy that helps investors find a powerful balance of income plus growth. There has also been a few articles released on Stag Industrial recently, including this article by Motley Fool titled, "Try these 3 dividend machines if you want to be paid monthly with regular raises." And you guessed it, Stag Industrial is listed in this article. The article starts by listing Realty Income and Agree as the first 2 monthly dividend paying companies that make regular raises to their dividends, and then lists Stag Industrial. It says that unlike the other 2 REITs discussed in this article, Stag is an industrial REIT. It's the only one of its kind among the couple of dozen REITs that pay monthly dividends. This Boston-based operation is comparatively young. It went public in 2011, but it's building a solid record of raising dividend payouts by providing reliable tenants with high demand space. When Stag raised its dividends by 6.5% to 12.25 cents per share beginning last month, that marked a decade of at least 1 increase per year since the company began monthly payments in October of 2013. The stock yields about 4.1% at a share price of roughly $35. Okay, let's look at Stag's official Q4 earnings release. We know a REIT's FFO, or funds from operations, is one of the most important metrics to follow and equivalent to most other companies' PE or price to earnings. Here we can see that Stag achieved a 55 cents of core FFO per diluted share for the fourth quarter of 2022. That's an increase of 7.8% compared to the fourth quarter of 2021. Which was a core FFO per diluted share of 51 cents. Its core FFO for the year ending in December 31, 2022 came in at $2.21, compared to last year's that came in at $2.06, which comes out to an increase of 7.3%. So this is a nice increase for Stag year over year. As we know, this past year, Stag expanded heavily due to the high need of warehousing space produced by the pandemic, as well as the need for more products to not only be stored in the US for logistic purposes, but for companies to also have their own products made or distributed by their own companies rather than third parties. The expectations by some analysts was that Q4 funds from operation would come in higher at 56 or 57 cents per share. In Q3, their core FFO came in at 57 cents per share, which is a decrease per quarter. But I do have to say that although we do see a decrease there, we are still seeing a company that year over year has increased its FFO per share. Most analysts have not been very accurate in 2022. In fact, most of them said January was going to be a very red month. And it's one of the greenest months we have seen in a long time, if not the greenest in at least a year. I think their core FFO came in healthy for Q4, especially since we are still seeing that number grow year over year. And we are seeing a growing portfolio with a growing dividend. They also have an occupancy rate of 98.5% as of December 31st, 2022, which is an increase since the last reported number in September that came in at 98.2%. And also their operating portfolio occupancy was 99% versus 98.8% in September. So we're only seeing that number increase. Stag produced a cash net operating income in Q4 of $130 million, compared to $114.5 million in Q4 of 2021. That is an increase of 13.7%. They also produced a cash net operating income for the year ending in December 31, 2022 of $513.9 million versus 2021 of $438 million. That is another 17.3% increase. Here's another important one for us investors, which is cash available for distribution, which came in at $86.1 million for the fourth quarter of 2022 compared to $74.1 million in 2021. That is an increase of 16.1%, but overall for the year of 2022, there was a $342 $200.7 million in cash available for distribution versus $293.8 million in 2021. That is an increase of 16.7%. Great numbers so far year over year. The thing is, we know Stag has recently been growing way faster than it did in the past, which is great, but they were more in demand last year. And although I do believe we will continue to see this company grow, especially as they get more cash and investors, they will not be growing at such a fast pace. There just isn't as many companies rushing to get more warehouse space as they were in 2021 and 2022. There will always be a need for companies like Stag Industrial, and that is why I have them in my portfolio. They have great clients, they continue to grow not only their ownership in industrial spaces, but their dividend, their cash, their client base, just to name a few things of what makes them a great REIT. Their EBITDA reconciliation, which is their earnings before interest, taxes, depreciation, and amortization, came in at $475 million. Which is an increase from 2021, which came in at $399 million. Lastly, I wanted to add this article from the Motley Fool that reads, if you invested $10,000 in Stag Industrial 3 years ago, this is how much you would have today. Well, your $10,000 would have turned into $12,850 when you include the dividends, which is about $500 more than you would have if you bought an S&P 500 index fund, and roughly $2,400 more than you'd have if you bought the Vanguard Real Estate Index ETF. That makes Stag the winner in this comparison. So tomorrow at 10 a.m. Eastern Time, we will have the earnings call with Stag Industrial, and I will be streaming it live, so hopefully that works. Otherwise, I will give you guys an update on the earnings call. If you enjoyed the video, please consider subscribing and might as well hit the like button while you're at it. See you in the next one.